Satya Nadella, Microsoft CEO, did warn us in the beginning of the year that the tech sector is going to have difficulty for the next 2 years. And last week, Microsoft reported for quarter earnings. And what happened? Their revenues stay about the same year on year, but their personal computer sector, their revenue slowed. They have lower revenue this year in comparison to the 2021 year, and their highest growth sector, the cloud computing sector, even that sector, their growth slowed to the 30% range, which was really bad for Microsoft then. So let's analyze Microsoft. Microsoft is trading at IP about 27 PE. They have a market cap of $1.8 trillion. They are trading at a forward PE of 22, which is low if you compare to the recent history. Things we love. Their revenue growth are increasing about a 15% rate year per year in the last 5 years. Their gross margins are about 68%, which is really good, and their net margins are about 33%, which is really good. It's difficult to find a good business like Microsoft having these high margins, so it's a good point. They have a lot of cash, 99 billion, and their long-term debt is around 44 billion, so they can pay all their long-term debt with only their cash in hands, which is really good. Their return on invested capital is around 31%, which is really awesome. If you take the market average around 10%, Microsoft is really good. So their long-term debt is low as well. They are paying a dividend yield around 1%. It's low, but they are returning capital to the shareholders via dividends and share buybacks as well. So let's look into our checklist. Microsoft moat is wide. They have a good moat. It's difficult to take Microsoft out. Their revenue growth is around 15% a year. They are compounding their revenue at a CAGR of 15%. They have a high return on invested capital. They have low debt. They are free cash flow positive. They are printing money, basically. They returns capital to the shareholders. And do they have a fair valuation? Let's analyze. So let's do our discounted cash flow analysis for Microsoft to find out the intrinsic value of the company. So let's do a 10-year analysis. So for the revenue growth, I believe if the cloud sector continue to grow around 30%, maybe 25% for the next 5 years, Microsoft can increase the revenue around 50% a year, maybe 18%. So I'll assume some conservative. I will be conservative, so I will assume for my base case growth rate of 14% for the next 5 years and 10% for the rest. Their margins will be around 35%, which is lower than we have seen in the last year. They have been their margins have been around 36-37%, so a conservative assumption. For their PE, I know the average PE for the market is around 15, but Microsoft is an awesome company. They have a high return on invested capital. They have a higher margin, so I will assume a premium for them because I love them and I think they deserve it. I will assume for my base case 18 PE. For my discount rate for my base case 12.5%, and that make a valuation around 160. So for my bull case, I will assume 17% for the next 5 years, 12% for the rest, 20 PE, and and this comes through, I will have a higher discount rate. I will assume a 15% because it's difficult. It's more difficult to have this higher growth, so I will want a higher return on my capital. And for my bear case, this is the minimum I will think Microsoft can achieve. So 10% increase on the revenue for the next 5 years, 6% for the rest, 16 PE, and 10% discount rate for these assumptions. So assuming that three cases, assuming that our net cash, if you retire the long-term debt to the cash on hand and divide that for the shares outstanding, we have a $7 per share. So adding that to our value, we have an intrinsic value of $163 for Microsoft. So that's a low value. I know everyone thinks Microsoft is trading around fair value. For me, it's not. They are trading almost at $250. I know we probably won't see their Microsoft trading around their fair value or my intrinsic value. I don't know which will be the trading range I will be buying Microsoft. Maybe I will not have the opportunity, but I will be trying to look into it. Above $200, maybe I can buy it around $180. I don't know still, but I will. Microsoft is a company I really want to own, and if the market can help us do that, if their price or their price decrease or their fundamentals increase, maybe I will own it one day. So that's my Microsoft analysis, and I hope you find it useful, and please subscribe. Bye.